Hi guys, my name is Beth and today is January 7th, Tuesday, and let's continue our Forex technical analysis for swing trading. As you guys know, I always start with the USD index chart, and here we have the market consistently behaving above the blue moving average line, right? So that means the trend is up, and in other words, USD is strong. That means we're gonna look for opportunities to buy USD. So let's write it down. Today, Tuesday, USD index trend is up, which means we're gonna look for opportunities to buy USD. Now let's analyze each individual Forex pair. So we have the USD Japan Yen. Trend is clearly up here. Market is behaving consistently above the blue moving average line, but unfortunately the size of this leg is just too big. So if the market keeps retracing into 40% at least here, then we will have our first opportunity to buy USD Japan Yen. But when the leg size is too big, I don't usually trade, even though it's in a good zone. So let's write it down. USD Japan Yen, trend is up, leg size is too big, and if market retraces about the 50%, then we will have an opportunity for risk and reward ratio 1-to-1 trade. USD Canada dollar loonie, next pair. So we have the leg size like this, up, down, up, down, up, and unfortunately the size of the current leg is just too big also. When the size is too big, it's unlikely to demonstrate the Fibonacci extension on the next leg. So if the market keeps retracing into 50% retracement like this, then usually I will buy here at 50% retracement, and I will take the profit at the new local maximum here. Risk and reward ratio will be about 1-to-1, but for this big size I wouldn't trade the loonie right now. I would wait, or I would trade another trade that demonstrates better opportunities. So let's write it down. USD Canada dollar, trend is up, leg size is too big. Our technical decision is to wait 50% retracement. Okay, USD Schweizer franc. So here we have the much better trading opportunity. We have up leg retracement, up leg retracement, up leg retracement, and market reached the 50% retracement here. And at this point I had placed my buy limit order at 50% retracement. Here I entered the really good zone at 50% retracement. I set my stop loss below the local minimum here, and I set my take profit at the Fibonacci extension 1.618 up there. So my risk and reward ratio is about 1-to-3. So here right now the market seems to be returning into original trend. Now it should continue like this, and soon it should hit Fibonacci extension 1.618 here. And until that, I will keep my stop loss here at the local minimum. It's a really good support. It's very likely to hold. And as anticipated, market nicely reached the 50% retracement here, which I read correctly and entered the buy. It triggered my buy limit order. So let's write it down. USD Schweizer franc. Our decision is to keep 0.7% buy. So on this trade, I risked about 0.7% of my account. So let's highlight it by green. Keep 0.78%. So now what will happen if the market keeps retracing like this? So at this point it will consider it the fake out, right? So if the market hits the stop loss, it will be considered the trend reversal. If it keeps retracing, it will be considered fake out. If it market trend continues to go into the original trend direction, it will hit the take profit. So at this point we have three possible scenarios, and which is exactly according to my trading system. So imagine this support holds and the market keeps retracing like this, then it's very likely to return in the original trend soon and hit take profit. So it was a perfect execution here. Okay, so at this point I have risked all the position I could afford to lose at USD Schweizer franc, which means I have no more bullet to risk. So let's just write it down here. Okay, now let's analyze the next pair, pound USD. So here we have down leg like this, retracement, down leg, retracement, down leg, retracement, down leg. So we have and after that my market seems to retracing, and it reached the 40% retracement here. Now it seems to be returning into original trend. So my minimum good zone to enter trade is a 50% retracement, right? So right now the size of this last down leg is decent, not very nice, but not too big, but it's okay. But if the market keeps retracing more into 50 to 60% here, it will be a really good fake out zone. So if I were you, pay close attention to pound USD. If it retraces to 50 to 60% here, then sell pound USD. It's a really good fake out zone and it should reach into original trend soon. If that is the case, I'm gonna set my stop loss at the local minimum here, and I will put my take profit at the Fibonacci extension 1.618 here. Your risk and reward ratio will be about 1 to 3. Okay, so pay close attention to pound USD. Pound USD leg sizes is okay, and our decision is to wait 50% retracement, then sell pound USD. Okay, Euro USD. Here we have the down leg, retracement, down leg, retracement, down leg. Now market has retraced into a good zone and reached the 50% here, which would have been really good zone to sell Euro USD. Unfortunately, I already entered at the USD Schweizer franc, which was still good zone also, so that I'm not trading Euro USD. So somehow, if the Euro USD still keeps retracing and reaches the 50 to 60% retracement here, then sell Euro USD. It should return into original trend soon. So if I were you, I will also pay close attention to Euro USD and sell it when it reaches 50% retracement again. So Euro USD down, nice, wait 50% retracement. So actually it already reached, so here it reached 40% retracement, reached 50% already reached. Yeah, so if you have been following my videos, here the 50% retracement here, 2 whisks here, it was a really good sell limit opportunity, and which I read correctly in my previous videos. Okay, so next pair, Aussie. So here we have down leg, retracement, down leg, retracement, down leg. So the current down leg, the size is just too big. Market seems to be faking out a little bit here, and if somehow the market still fakes out, retraces more into 50% retracement, that is technically a good zone to trade for one-to-one trade opportunity. But given that trade opportunities for Euro USD and Pound USD, this setup is not just good. If I were you, I would just focus on Euro USD and Pound USD. Right now, the size of this leg is just too big, which is less opportunity for trading. So I'll say down too big. Technically, I will wait 50% retracement. But once again, if I were you, I will close on Pound USD and Euro USD because the leg size of Pound USD, Euro USD are much better, so that it's likely to demonstrate Fibonacci extension on the next trend leg. Okay, New Zealand dollar USD. Here we have the down leg like this. Now market seems to be retracing, faking out a little bit. Now it seems to be returning into original trend. If the market somehow retraces into 50% retracement zone here, it will be a nice one-to-one risk and reward ratio opportunity here. Okay, so let's write it down. New Zealand dollar USD down, too big, too big. So since I already entered all my positions on Euro USD Schweizer franc, I don't have any more position to risk. So right now, looking at this spreadsheet, Euro USD, Pound USD presents much better opportunity to trade. Just wait until it reaches the 50% retracement again, then it will be good to sell them. Alright guys, thank you guys watching. See you on next videos.